Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to the week that was, the weekly podcast that sums up market movement and events from the past week and their implications on asset markets. I'm Michelle Castellino, your host for this week's podcast. Markets remained under pressure this week, with the Nifty down 2.7% and the Sensex lower by 3.2% as of Tuesday, the 12th of May. The decline continued to be driven by rising crude oil prices amid the ongoing Middle East tensions, with the Brent now at $107 per barrel, still elevated. Broader markets also felt the heat this time around, with the mid-cap index down about 0.9%, while the small-cap index fell 1.3% since the 5th of May, a notable shift from the resilience they showed in the prior weeks. Sectorally, it was a week defined by a clear risk-off tone. The IT sector remained the biggest drag, falling another 3% and now down 25.5% year-to-date, as concerns over AI-led disruptions to traditional outsourcing revenues continue to weigh on sentiment. Energy, realty and banks also fell, all hit by the same theme: rising crude prices, increasing inflation fears, and pushing back expectations of any near-term rate relief. On the brighter side, pharma and telecom sectors held up well, with pharma sector up around 1.2%, while telecom sector rose close to 4%. Since Monday, markets have reacted sharply to the PM's address to the nation over the weekend, with the Sensex crashing over 2,500 points since Monday. In his address, Prime Minister urged citizens to reduce non-essential gold purchases, cut fuel consumption, avoid unnecessary foreign travel amid the rising economic uncertainty. Jewelry and airline stocks bore the brunt, while EV and green mobility firms rallied on the government's energy-saving signal. Prime Minister's address served as a reminder of India's structural vulnerability as one of the world's largest crude oil importers, indicating that any prolonged supply disruption or sustained rise in oil prices continues to pose downside risks to the rupee, inflation and consumption. India's forex reserves stand at $690 billion as of the week ended 1st of May, which is down from the all-time high of $728 billion, which was hit late in Feb 2026. The USD INR now sits at a little over 95, up 6.4% year-to-date. India currently holds over 800 tons of gold, which accounts for roughly 17% of its forex reserves, a meaningful allocation. Annual gold demand in India remains high at around 700 metric tons. At the same time, India's CAD is expected to widen to approximately $70 to $80 billion in FY26, up from $40 to $50 billion in FY25, driven largely by higher gold and crude oil imports. In an environment of rising energy prices, lower gold imports could help ease pressure on the rupee, support currency stability for foreign investors, and reduce the risk of imported inflation. On fixed income, the 10-year G-Sec yield ticked up to 7.05%. Gold in rupee terms gained nearly 3% over the week and is up 14% year-to-date. Oil, despite easing slightly, remains up by a staggering 76% year-to-date. Global equities took a very different story over the past week. Developed markets gained 1.9%, the S&P 500 rose 2.1%, and emerging markets jumped 4.6% over the week, with Asia ex-Japan up nearly 5%. Despite India's relative underperformance to global peers year-to-date, we believe Indian equities continue to be attractive as the valuations are trading at attractive levels, while earning expectations continue to be resilient. Within equities, we continue to stay overweight large-cap stocks, given their stronger balance sheets, better return on equity, greater margin of safety in earnings and valuations, and some scope for valuation re-rating. While small and mid-cap valuations have corrected, they remain elevated compared to large caps. Importantly, the indiscriminate market sell-off in March 26 has resulted in more meaningful under-the-surface damage across the small and mid-cap segment. That's all for this week's edition of The Week That Was. If you found this update useful, don't forget to like, share, and subscribe. Thanks for tuning in. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.